watching Famous Dave on YouTube.
Welcome back. My name is Dave, and let's see, do I have sound here? It doesn't look like I have sound. Hold on one second here. Can you hear me? I don't think I have sound. Hello, hello, hello. Hello, hello, hello. Can you hear me? Oh, it looks like I do have sound. Sorry. Welcome to the show. My name is Dave. We are experiencing a bit of a down day today in financial markets with E-minis currently down 24. I'm coming to you sort of midday. Let's take a look at the positions and we'll talk a little bit about the market. It kind of feels like we are in a sort of holding pattern for these meme stocks. You know, we had a couple good weeks of, well, good if you're short, of going down, but since then everything's kind of sideways sort of. Here is a picture of the last 10 days in GameStop, and you can see just kind of up to sideways action. If we back this chart up to a 20-day view, you can see we're still kind of in a downtrend, but definitely moving sideways. If we go to AMC, similar situation here. However, if we look at the volumes here, we've got AMC 26 million and GME only 400,000 right now. And we had a really low volume day yesterday also in GME, as people are kind of moving on to other things, it seems. However, that doesn't mean that people have sold their shares. I was watching something online yesterday saying that AMC is the top stock in millennials that millennials own. And there's just sort of this sort of in the street knowledge that, oh, you buy AMC and you just hang out. And it seems, you know, from the outside, it seems kind of strange. Of all the stocks in the world, why would people pick this one company that has movie theaters? I mean, wouldn't you can understand like a Tesla or an Apple or a lot of other companies, but why would everybody focus on just this one movie theater company? And the reason is because people perceive it as being cool, A, and B, they heard about people making money in this, and so they're jumping on. Now, if we look at AMC from even the most sort of rudimentary charting ideas, there's not a whole lot to get excited about, right? We had this huge spike up, and now we're kind of coming off of that. And there's certainly a possibility this could go back to $10, right? So not quite sure why all these people jump on board. I was watching some, you know, if somebody's a successful YouTuber and gets a lot of clicks, all of a sudden they're an expert in everything. And so I've seen some successful YouTubers come on and say, I'm starting a finance channel. Everybody's got to buy AMC, and that's their finance idea, which is clearly ridiculous. Anyways, in VIX land, VIX back up around the 1940 level today with UVXY back above 30. Kind of once again, although we know that these products are decaying all the time, this one is kind of in a holding pattern. If we look at the long-term chart, we can see, yes, it is slowly moving lower. But if we zoom in a little bit, here's the 180-day chart, and you can see, really, we've been hanging out around 30 for a while now, right? If you'd bought, you know, if you traded this sometime in June here, it really hasn't moved since then. And yes, stuff is decaying, and certainly with a VIX of 1924 today, it is lower than if you'd had a VIX of 1924 2 months ago. UVXY would be higher than it is now because it is decaying. Of course, UVXY based on VIX futures, not the actual VIX, so it's not really a great reference to use, but really not a lot of movement in these products as the volatility has firmed up a little bit. I think some of this we never know why something's happened until, you know, significantly after the time of the event, but I think it's safe to speculate that, increased COVID fears, renewed COVID fears are generating some volatility in the markets. Here, as I pull up a, this is VIX Central website, we can look and see that a decent amount of contango here between the two futures involved. We've got 6.3%, which is a good average for what we've been seeing lately, and a fairly healthy, I would say, term structure. Now, the term structure just refers to this chart of plotting different futures against one another. And the front month future, we can see, is this August one. And if we hover above this, we can see that this expires in 3 weeks. So we're about a week into the expiration cycle for this future. All of the VIX products are, of course, based on just these front two futures. And when you are a week into the cycle, that means that UVXY, VXX are based on a mix of futures, which is roughly, it's roughly 2/3 the, 3/4 the August future and 1/4 the September future. And each day, it slowly moves more to the September future. Now, the way these products work in actuality is they're based on an index, but the index is modeling a situation much like the one I'm talking about, where you've got UVXY, VXX being based on a mix of futures that slowly every day is moving out by a day or by a fraction, let's say 1/30th or 1 day out of the month, however long the expiration cycle is. If the expiration cycle is 30 days, then 1/30th of the fund is going to be based on the next month out as each day goes by. If it was a 29-day cycle, it would be 1/29th, that sort of thing. So, so when we see a future, if I get out of the way again, of 21.20, and that's representing 3/4 of the of what UVXY is going to be worth, then this future is really crucial to the pricing of UVXY, VXX. And as this future moves up and down, UVXY and VXX will move up and down exactly in relation to that future. Or I should say 3/4 relation to this future and 1/4 relation in relation to the September future. And really, that 6% decay is that's a significant amount over time, right? This represents not 6% annual. Usually when we see a percentage number, it's annual. You see on your credit card 20% interest. That's 20% per year. We don't know how often it is being calculated or taken out. But when we look at a chart of the VIX term structure, that number of contango is per month. So if you wanted it annualized, you would multiply it by 12. So this is actually, if you think of 6% multiplied by 12, that's actually a much bigger number annually. And even per month, 6% is pretty big. You could just do some really quick math. And if you say, okay, UVXY is trading 30. If you multiplied 30 times 6%, you get 1.8, right? So that, back of the envelope math would be saying that UVXY, the effects of contango are decaying UVXY by, almost 2 points per month, all things being equal, when we are in this 6% area of contango. So really, the stuff is going to go lower. Even with the VIX firming up, this stuff is decaying at a pretty rapid rate. So that's something to kind of keep in mind. And also, if we look at the chart here, we can see UVXY kind of we can see this spike from last week, and we're a little bit off the lows of recent times. If we were to get another spike, it might be a good time to, initiate some sort of short action. We can see the Dow down at 125 now, but the Nasdaq down 233, which is really the most down index right now. But down 1.5%, with E-minis down 0.6%. So not a whole lot going on, but definitely a down day going on right now. If we want, we can go into our Think or Swim here And under watch list, we can pull up the top 10 stocks that are percentage losers, maybe in the Nasdaq. Give us an idea of what's moving around. This let's see. So IRCP is down a lot, right? It's down 7 points to $3. So I'm not familiar with this stock, but that one's certainly taking it on the chin. You know, it really kind of depends on how big these companies are. If you have a really small company that happens to be down, that might not really affect anything that much, but still interesting to see what the biggest movers and shakers are. If we were to go to, we could do the same thing with the New York Stock Exchange. Anyway, top percent. Another thing we could look at is the most active stocks. So if I were to go under here, I could go to top active Nasdaq, and we see XELA. Now remember, once again, a stock that's trading $2, 88 million shares of a $2 stock is certainly not as significant as 88 million shares of a $181 stock. But like this BABA here, $182 stock, 28 million shares. That's some significant money moving around, right? Also, Apple. And, of course, you're going to see stocks like Apple that are among the most active almost every day just because they are highly traded products. And we have Apple down today a little bit on here. All right. So, yeah, so I'm going to figure out what is going on with my GME because really not having good luck to the downside as of late. There's the chart, though, and it still looks bearish to me. The position I have on right now is, here we'll show you, 52 days out to expiration. I am long the basically the 80-70 put spread here. So I'm long the 80 put, and I'm short the 70 put. Right now, the spread is worth around $5.60, something like that. So it's worth about half of what it potentially could be worth. So let's see. So you can see the position there. I'm long 13 spread. So 13 times $10, which is the width of the spread, would be $13,000. If on expiration this is below 170, I am short one of these spreads down here, the 145, 135 spread. So if we were to close on expiration below 135, I would make $13,000 on these spreads and lose $1,000 on this spread. Basically, the trade that I've been doing as of late was I did have as many short spreads down here as I had long spreads here to and was basically flat deltas. But then we kind of moved higher one day, and when we moved back up again, I bought in my short spreads to take a little profit on the ones that I'd sold a little bit earlier. And now if we do move back down, have a nice big down day, then I will put back on those downside spreads, kind of trading in and out of the position a little bit, but ultimately looking for this to move lower in the next few weeks. Looking for this, to go, I would say, down to like the 150 range, but we'll have to wait and see. The market is looking weaker still as I talk to you now. Let's take a quick look at Drudge Report and see what news headlines we have going on here. CDC reversal, masks for vaxxed indoors. So, policy obviously changing all over the place here. I know everybody has different views on this, but certainly COVID coming into play as I saw a statistic that says that only 49% of the U.S. is vaccinated, or maybe it's 51%, but basically half is vaccinated in the U.S. And I hope that number goes up because we're still going to have a lot of problems with COVID. If you think of it as, 50% of the U.S. is not vaccinated and everything is completely reopened, then yes, it's safer than when everybody was unvaccinated, but still very potentially dangerous for those who are not vaccinated. All right, so that's kind of where we stand, and that's my position right now. I have nothing going on in UVXY, but if we do get more of a sell-off here, I would consider initiating something. And what I would look at is a similar kind of long put spread type position. So maybe I would go out. And I know it seems like, okay, well, is this the only positions I have? Because I have a similar position in GameStop, but that's just coincidental at the moment here. But if I was going to put a position on in UVXY, I would go out at least 30 days. So let's look at September. You know, if we were to pop, let's say right now it's trading 30.71. If we were to pop to say like 35 to 35, I might buy like the 34.30 put spread, buy the 34 put, sell the 30 put out in September. Right now, not a great deal. You pay $3 for that spread, and it can at most be worth $4, right? But if this pops way up, then if you can get a situation where like you're paying $2 for the spread that can be most be worth $4, then you know you're setting up a situation where you could double your money in 52 days. And if we were to initiate during a big pop, then it would be a good time to put that kind of position on. Even now we're at an elevated state, so it's better spot here now than I would say usual to jump into a short in the VIX, just because we're not at the bottom right now. We're off the lows, and the VIX is also off the lows. If we pull up a VIX chart, you can see we got down to the lowest. We got down to 14 and change here, but now we're back up to almost 20. So certainly the VIX can move higher from here, but we're approaching the higher end of the recent range for the VIX here. So, and it looks like we may actually have finally kind of gotten out of that COVID sell-off thing, and we might be moving into like a kind of a new phase for the VIX here. We'll have to wait and see what happens. As usual, everything doesn't become clear until after sometimes. Anyways, I want to keep this short today. Hope everything is going well in, as they say on today's show, in your neck of the woods. What does low volume mean for GME? Well, I mean, low volume doesn't specifically mean a bullish or bearish sign. It just means, so I would say if we do get a move one direction or another, and it's pretty low volume move, then take it with a grain of salt, right? Because it certainly could get reversed, or it's not. If a move in low volume is not as meaningful as a move in high volume, and I would say that basically low volume does not say that that's bearish or bullish. It just means that people are going on to other things. I would make the argument that over time, if GME volume really dries up, that means people are losing interest in that. And my speculation is that a lot of people that are long GME are more of a short-term type investor type people, newer trader type people, and thus over time, volume drying up is going to mean that people are going to lose interest and sell their shares. But just a day or two of lower volume has no indication of direction in my point of view. And so there we go. That's what's going on right now. AMC on a down day once again. I think that these things are destined to move lower, but we'll have to wait and see. That's just pretty wacky chart in AMC here. Let me get out of the way, and we'll end on that chart. Thanks for watching, guys. Best of luck, and we'll see you next time on Short Ball Show. Ciao.
You're watching Famous Dave on YouTube.
Hold on, I'll just answer that question real quick. There is not a lot of short interest in GME right now, so it could rally. Certainly it could rally, but I wouldn't consider it a squeeze if it rallied. A squeeze is more of a situation where like there's a ton of people short and they're looking to cover. When you don't have that much short interest, then if it rallies, there aren't a ton of people that are like desperate to squeeze. Now I'm showing right now. That GME is around 25% short interest, which is pretty high actually. But remember, when we had that big squeeze in January, February, it was 130% short interest, right? So the conditions just aren't in place for a huge squeeze. Now, that doesn't mean that we can't have a big rally, right? We certainly can have a big rally, and people can jump on. A bunch of people can jump in, and the stock can rally a lot, certainly. But there's no way to predict, and I don't have any special insight to give you on whether that's going to happen, when that's going to happen, or that some sort of signs in the tea leaves are saying one way or another whether that's going to happen or not. So certainly stock could rally big. Anything could happen. The future is unknown. Thanks for your question, and thanks for watching, and we'll see you next time.